can see this. So take a look at this here. Can we see this here? Look at that. Right, so this is the move above the 50 line. I'm just looking at the knob spread, not the fob spread. See that there? So if I sell bonds there, it's quite a strong sell. We go above the 50 line here. I can sell bonds there, okay? We go below the 50 line here. I can buy bonds here. It's a very high probability trade opportunity. We go below the 50 here. It's only the knob spread I'm talking about, guys, not the fob. Yeah? Not cherry picking any examples. I'm just giving you the ones that you can see clearly visible on that screen. That one touches. You could classify that as a touch. If it's a touch that you're using, then it's a sell. If it has to go through it, then it's not a sell. Your choice, makes no difference to me. Now, this goes back to Wednesday the 13th, so it's not a lot of time on this, right? So if I go back to Wednesday the 13th, and let's take a look at how those cells developed. Sell, sell, buy, sell. Let's take a look and see how they developed. So here's that touch as a sell. Did it develop? No. Why not? Because it was midnight. You know, there's got to be a time relevant element to these trades as well, right? So it's a midnight. Did it lose money? No. It made some pretty special little money, didn't it? It made some special money considering it's an overnight session. I mean, it's okay. How did this sell do? How did that sell do for you? $1,500 of buy side of sell side profits, right? How did this buy trade do? Well, it started early, you know, so obviously it did draw down during that period, but did it lose you money if you had the capacity to work those orders? No, it made you money, gave you a great little buy reversal. How did this sell trade do? Pretty good. Nice, good trade. How did this sell trade do? Well, this was a sell trade this morning. How did this buy trade do? Well, that was the buy trade that we just made money. Yeah, I know we've scratched out on this one. That's okay. Still made money. You know, if every trade has to always make money without scratching, that's different. But you know, if it's a trade you're looking for, this is a great setup to get into the trade. And Sammy knows this setup very well because this was a classroom we did when Sammy was talking about the belly of the curve itself. So it's clean and it's sharp. That's the other thing about these. It's clean and it's sharp. It gives a very precise, a very crisp entry process. And the takeaway is as you can see, monster profits over the last few days. I mean, that's just since, literally just since yesterday. There's been 1, 2, 3, 4, 5, 6 winning trades since yesterday. Which is pretty good, guys, which is pretty good. And it goes on, by the way, the top edge that was the top edge, it caught the top edge beautifully. Difficult to know about the buy trade because the buy trade was on this the bounce, the data bounce. But I'll show you what happened on the Tuesday. You see what happened on the Tuesday? See the sell? See how the purple line finally goes above the 50? So with the purple line just above the 50 there, you top ticked the bond 132s, sorry 131s. And you can see obviously that it spiked lower here, and you did get a buy trade, and it did make money again if you took it. But it's just a little bit unfortunate because obviously the short sell, if you weren't going to take it on the data, the short sell went from 130 down to 129, 131 down to 129 for $2,000. It was a monster trade. So massive profits on simple things, guys. But again, it's like what we talked about when we talked about the single prints. It's about finding something that you know, something you're comfortable with, and using it as your trade process. Now, I'm not saying that as soon as it does that, I am a seller. What I'm saying is it brings my attention big style, because if we get a spread of that size, of that magnitude, something's going to have to give on that, guys. Something is going to have to give. And most of the time, it's the underlying price that has to give. Reeve, it's not the RSI of the NOB spread. It's the RSI of the NOB spread compared to the RSI of bond prices. So we're not doing. It's not a single RSI. It's a comparison RSI. Yeah.